Higher for longer. That's what Jay Powell says about these interest rates because persistent inflation, oh, it's there, baby. We'll be discussing that, the black swan that has already begun to sing, and much more today on Money Never Sleeps. Welcome back to Money Never Sleeps. For the four of you out there watching this, thank you for joining us today. Hit that like button, subscribe to the channel. Nothing that we say is financial advice. Do your own research. Kevin, Jay Powell is out here. He's on his shit again. We're keeping rates higher for longer. I'm looking at the CME futures right now. We're up at about a 54% chance of no rate movement in July, June. Nothing's happening there. Let's see. If we go to September, we are now at about a 30% chance that there's no movement in the rates, up from 8% last week. So the markets are getting a little scared here. Old Jay Powell out here saying, you know what? Inflation's not going anywhere. Let's just keep these rates up. Do you believe him, my friend? And happy Tuesday.
Happy Tuesday, man. I believe in golf. This is what they call a pump fake. But yeah, this is
Golf?
I'm joking, obviously. It's a joke. It's Happy Tuesday. I'm trying to keep you guys alive. And I know it's football. But anyways, when I'm seeing Jay Powell say this shit, it's so funny because they're saying, well, we don't know if inflation's coming down, right? We might be worried that inflation's actually going up once again. I talk about this all the time. Oil, commodities are going up, in terms of silver, gold, aluminum, copper. There's a copper shortage right now. So they say, and I don't know if that's just supply demand and how much they're.
Remember when Ace had all of his just yards of copper? I mean, he could be just raking it in right now.
You could be rolling in some good old copper right now. Yeah. I mean, even better, US dollar, because let's bring that up right now, because that's the reason why we're not in an inflationary period. If we were, wouldn't the dollar be going down in value? However, it's going up. That is probably the biggest farce that I've heard across the board. Why we're seeing inflation and we're seeing reflation, and we're not accounting for the dollar being strong here. You can say, oh, no, Japan and everything like that. Yeah, that too. But if the dollar was weakening, we probably expect that, okay, we're in an inflationary period. We're probably going to see QE at some point. We're going to see, well, not QE. We'll probably see rates stay higher for longer. And we'd probably be in a more, I guess, easier time period for people to be buying into the equity market. However, we're getting a little toppish here. People are getting scared. We're seeing collateral shortages across a lot of these banks. We're seeing bank profits plummet. We're seeing bank runs happening quietly over the past few months. People are going to want the dollar because why? It seems to be the strongest asset right now for everything that you need across debt markets. It's also the strongest asset in terms of volatility. You don't have to worry too much because the dollar is equal to $1 when it comes to your purchasing power. That is the biggest lie that they are not telling you. They're saying that, we're going to see inflation higher for longer. We're going to have rates higher for longer. I think we will until we don't. And when we don't, it's a race back down to zero. That is what I'm saying. That is what I believe in 100%. I think we will be back at 0% interest rates. But right now, I know that's scary for a lot of people, but it's just things will break at some given point. You keep saying higher for longer, and these banks are coming in with the earnings. Bank of America today saying that they're down 18% in terms of profits. PNC was down, I think, in net income 22%. These are big numbers for these larger banks. If they see rates higher for longer, they're not going to create debt, which means that we're probably not going to see people put money into the economy. You're going to see these companies start to lay people off. We're like 1 or 2 weeks away from all these companies reporting earnings, and it's going to get absolutely bloody if we're looking at some of the brick and mortar stores. So if that's not a sign that the dollar is going to be stronger and that we're probably not going to see rates higher for longer because something will break, I don't know what is at this point.
All right. Let's go ahead and start looking at some of the charts here. And I actually want to start in treasuries today because that is where the Swan song is singing. That's the canary in the coal mine, as they say. We're seeing rates on treasuries continue to go up, meaning someone's selling. Someone is selling. And it's not people over here, I don't think, Kev. Why don't you enlighten us?
No, you are absolutely right, Joe Webb. It is not anyone here in the U.S. As a matter of fact, no one in the
Well, let's
U.S.
be honest. There are some people probably, but not the main driver
Sure,
of this.
sure, but I mean, the amount that they would move the percentage point would be like the
I
size of a
don't know.
mosquito's.
My $5,000 treasury might move the percentage point.
It's like the size of a mosquito's pecker. It's not much. But the funny thing is here is that we're seeing these massive moves at usually in Asian market hours, which tells me even early in the morning today we're seeing this too. What are we seeing overnight and in the debt markets? We're seeing someone sell off significant amounts of treasury debt. And there's only one player, in my opinion, one person that I'm watching, and I say person, but I mean one nation that has a lot of US debt that is in an absolute chaotic period right now, and that is Japan and the Bank of Japan. So, Suzuki of the BOJ last night came out and said that they're going to monitor the FX markets and the forex markets, and they haven't said that they're going to intervene. However, there's there's some speculation that they did intervene last night and it didn't work, which tells us that hey, maybe there's going to be a lot more intervention that's coming out. I'm going to show you exactly where it happened. Right, I think you guys can already see it in the FX markets, but it was getting pretty fucking high up here. We were at 154.759. And then in the 5 minute chart, you saw a massive sell off and it went down to about 153.884. I mean, this is about 0.21%. That's a quick move in a 5 minute interval. And then it bounced right back. So, in other words, selling off the US debt isn't necessarily working for them right now, but that also isn't working for Janet Yellen or anyone at the Treasury Department, right? What do we use treasuries for? Keep the government running. It's a huge part. U.S. debt is America runs on debt, and if we're seeing one of our largest holders of U.S. debt just absolutely offloading it, and they're offloading it, and it's not helping their currency, what does that mean? That means that they're screwed. The dollar's the only thing that's probably going to be not screwed, and the U.S. is going to have to sell off. The US might have a huge problem where equities have a massive crash or a massive sell off that leads into a lot of money flowing into treasuries. Because I will say this, if something does break, right? If something does break, they're probably going to put their foot on the monetary policy. They're going to, they say put their foot on. I should say they take their foot off. They take their foot off the gas pedal. They're not going to be as hawkish and aggressive as they kind of are with saying higher for longer. And you're going to have these rates at almost 5% in some of these. People are going to want to lock that in, especially if you're starting to see 10% drops in equities. Say some of your stocks are, say Bank of America today dropped 5%. JP Morgan the other day was like 6 or 7%. You start seeing that across the board. Some of the big boys are the ones that we talked about, are the ones that have the most money in these clearinghouses, and they're probably the most likely to fall faster because as people sell off, they don't have the amount of liquidity necessary to match and make orders and market makers. Probably going to see a lot of people panicking. 5% looks pretty good up here. So I think that this is kind of a short-term thing in the treasury market. Thank you, Japan, because this is eventually going to cause a short squeeze in the treasuries here in the US, but that short squeeze comes with the consequence of the US equity market probably in an absolute tumble.
Speaking of equities that are tumbling, let's throw it over to Tesla, which had a pretty big gap down this morning. Tesla stock down at 156 and a half. As recent as the end of last year, it was in the 260s. So we have seen a really bad start to the year for Tesla. Prices of Teslas are plummeting. You can get a 2023 Tesla for like 20 grand right now. It is bad out there. They've delayed delivery of Cybertrucks. I mean, it is a mess. But don't worry, Elon's fixing Twitter first, and then he'll get to Tesla.
Don't get me wrong. I think Tesla's going to be perfectly fine in the next 10 to 15 years. But price is different from a company's survival, right? I think they can survive a recession, people not spending as much money, and they'll be totally fine. What I'm not as confident is, I'm also not even sharing Tesla's screen. Hold on. I pulled it up on the wrong window. But when we're looking at Tesla, you can't deny the fact that this was one massive ABC correction. I mean, unless out of nowhere, Tesla finds like, I don't know, what Tesla could find that brings it back up here, alien gold or something like that, that just everyone wants, and they hold it. They have all the Bitcoin in supply, and it shoots up higher than this A wave or this origin of the A wave at 415. This thing's going for lower. It's going to take out this 103 level, in my opinion. And this is just me looking on the macro. Yes, it's oversold on the weekly. However, what on earth could possibly happen between now and then before we get to that 103 level that's good for Tesla. I don't see the consumer getting stronger and buying these damn cars. I don't even think that there's a massive short squeeze left in this market. Maybe short term, but like long term, where we can see this get back up to where that C wave is right here on back in like June of 2023. We're getting a death cross on the weekly coming in soon. I mean, we're probably like 3 or 4 weeks away from this. You're going to find resistance on the 200 EMA if you even have the legs to move up that fast. It's looking very grim for Tesla at the moment. And I think this is the one that it's probably of the top 7. This was the one that was showing the most amount of weakness earliest on. And I remember people were making fun of me when I said that we'd probably go to like $64 for Tesla, but it doesn't look like it's not going to not try to go towards that direction at this point, right? It seems very much so that Tesla is not a buy. If Jim Cramer says it's a buy, then you kind of know it's not. But right down here, we're getting to a point where you better hope it holds at this A wave right here, right? 103, 106 range. That doesn't hold. You're coming to a lot lower. I mean, you're probably talking like 164 to, yeah, like $93 to $64 range. So I think Tesla it's very scary here. They're laying off tons of people. And again, they're an automotive company, but they're kind of a luxury automotive company to the point where people just don't have the money to buy their cars. It's just supply demand, and you're not getting either of those right now.
No supply, no demand. That is not a recipe for success at this point in time. All right. We're looking at crypto on the day, and we saw a move down earlier. Things have recovered a bit. ETH was just above 3K. Solana was under 130. It bounced back a little. So pretty flat and boring at the moment. We see Bitcoin dominance has come down a little bit in the mid 55 range. But, we've talked about some of the equities. We've talked about bonds. Anything in the crypto market that you think is worth discussing right now? We're looking at Bitcoin here. We see the triple top and the smile, the happy eyebrows, and whatever wedge pattern we got going on here. What's happening?
What can I say? I don't even know what's happening, man. We're looking at Bitcoin right here. It's a very, very scary place for Bitcoin, in my opinion, because you got a key level of support. You're already seeing Tether pump the money into the market. The lower you get closer to the support, I'm sure they got their limit orders there to prop it up at some points. I'm not convinced that if you come down here and you don't lose 60K, that we're going lower immediately. I think that there is a chance that we could push up in a stupid fucking the halving is here rally. That is my biggest concern for Bitcoin right now. We can take a look at the funding rates too to see how people are kind of lining their positions up. But I think that's a fun way for this market to trap everyone back into it, because this key level right here around 60K, there's a reason why Tether is printing billions of dollars. Even USDC was printing a lot of money last week, and they're sending to these exchanges. Binance was seeing a lot of inflows of USDT. Tells me that they're probably trying to support this line. Why? Because below 60K, and I've said this before, it's 52K. It is an $8,000 drop. There is absolutely zero support that you're going to see between there. You might see it in one day, which would be absolutely wild, right? And it probably won't be even when the markets are open. It'll probably happen on like a weekly close or something like that. And the next thing you know, limit down Monday morning. It's very possible. But that's my biggest concern. You're so close to that 60K level right now. You're going to have to watch it like a hawk to see where it plays out. And you got all the stochastic RSIs kind of on your side to think that it's going to go up. That's why I am more on the line that this might hold. We put in, this isn't a 5-way move down here in the daily. Down to here would probably be the 5th wave, maybe a little bit lower than that, maybe right here or so. And then we'd probably see an ABC corrective pattern. Now, ABC corrective pattern could be bigger or larger. I mean, this is an ABC right here, right? ABC. So we could also just take that and say it could be this large, right? And we're kind of just back in this range up here. Or it could be something very simple where we just get like a ABC like that, find resistance, and we continue to roll over. It's very possible that we could see either of those scenarios. It really depends on how much money comes in. I don't think the money that's coming in is going to be retail or institutional. I think if anything, if we want to call stablecoin issuers and minters institutions, then yes, that's one way that we could see this market pump and trap people right at the end. But for the most part, I don't necessarily believe that's it's getting harder to believe that we're going to go to 80K, but it's also getting harder to believe that this is going to hold forever, because I do think that we are going to crash to the 60K level at some point. I mean, we tested it once, twice, 3 times, maybe a 4th time here. if you come back for a fifth time, I mean, you're just playing with fire at that point. I think that there's a good chance that you're trying to pick up the pieces there. You're probably going to end up looking down for about $8,000 of losses, at least to the 200 EMA. So that's just the scenario I'm seeing with Bitcoin, especially with dominance being kind of crappy here, right? If we're going to see the market drop significantly, I want to see it get back to like this 57 level. Once again, we said that 52 to 57, it hit. Now we're waiting to see if it does go back there because I do think dominance could rise, but I think it would have to it'd have to move up first in order to rise, and then eventually you'd start to see it rise even further if there's a massive sell-off in Bitcoin itself, which would drag the Bitcoin pairs for all these alts down with it. So Bitcoin is just a sit and watch for me right now. We got the halving in 4 days or so, comes Friday night. So
I think the 21st, actually. I was just looking.
21st. Yeah, it might be the European time or whatever, but yeah, or Asian markets. Yeah, you're right. So yeah, it'll be the 21st for us, and also it's the edge of that wedge, and it's also post OPEX. So would not be surprised if we get a little bit of a rally into it. After that, though, you don't have much kind of supporting you. We're getting into May, and like I've said, for the past 3 years, May has been one of the worst months for Bitcoin. So keep an eye on that and see how that plays out. I don't think we'll have to wait too long to get our answer. Is there any other alts that we should take a look at that are worth taking a look at?
I mean, I think they're all going to bleed relative to Bitcoin. And if we're under the bleed, we have to look at it in a way that maybe we're wrong, right? Like,
Yeah.
we could absolutely be wrong here. And this was just a little bit of a correction. And then we head back to up only. I'm not really sure. Like, I guess the halving is the case. The election is what people want to keep pointing to, but I'm having a hard time making a bullish argument here for crypto in the short to midterm.
I feel like an asshole always saying that like people are definitely spread thin, but people definitely are spread thin, and these institutions just aren't buying. I can share my screen real quick, and we can take a look at funding rates. But this is just in general, kind of what we're seeing across the board. We are seeing a lot of these, I say insiders, which just means that there are people that work for these companies that are publicly traded that are offloading shares that they own. And we're seeing a lot more of that more often. And yesterday we had two big ones. We see that this chief operating officer Jeffrey Williams sold about 60K 60K Apple shares worth over just 10 million. So that's a huge amount. I mean, for one person, I think that's a pretty good amount. We also saw Jamie Dimon sell off $33 million worth of his JP Morgan shares per the SEC filing that came out yesterday. So these are people that are probably in a position to see how the consumer's doing. And you think if we're in a bull market, they'd want to make more money. They want to keep some skin in the game, but it looks like they're taking some profit off the top. They've been doing this for the past 2 to 3 months, right? So it's really hard for me to believe that an institution with, I will say, smart people that kind of understand how things are going based off of how they're running their business are going to be able to be that risk on and kind of invest their capital when they need capital on hand. That's why they're laying people off into these markets to kind of see if there's any risk, any reward. Right now, the reward against the risk is absolutely low, right? The risk reward that was absolutely great was probably around 29K for Bitcoin when it started to shoot up all the way to 74, 75, that range up there. I just don't see the risk reward here for a lot of these institutions. Maybe hedge funds. Hedge funds might be the only ones that might chase it up a little bit more. That'll be my bullish case, but someone would have to push the price up for them to chase it.
Let's talk about the housing market for a second. That was the other thing that I wanted to discuss. One of the pieces of data I was looking for today was housing starts, and that number came in, not surprisingly, I think we called this yesterday, below expectation. So the median forecast for housing starts was 1.48 million, came in at 1.32, so 160,000 under the expectation. The housing market is in shambles right now. Like, it is so bad. There is no demand for mortgages. And that's not going to change anytime soon with this higher for long, unless, you know what, Kevin, I am one of the few people in this world who would love it if rates went to zero, because then I could finally get out of my fucking house. But I can't when the 30-year, the rate is up to 7.43%. That is obscene.
Who wants that?
Who can buy a house right now? Like,
yeah.
the payments on houses these days is absolutely insane. So people are just kind of like we're just locked in a lot of different ways. Like people who are renting, like getting the down, 20% down on the median home price, I believe is now 413,000 is the number I saw today. So you're telling me you got to put 20% down. So, get about 80K cash. What percentage of people have 80K cash on hand right now? Not many.
Not at
And
all.
then you're looking at over 7% interest on that as well. Like the housing market is a disaster. Rates, they're going to have to come down to make it viable to buy a place again. It's just really a shit situation that we've gotten ourselves into here. I don't know how, how Biden and the Democrats are going to weasel that, like figure out how they're going to get out of explaining this one to people. Because if you have to ask, like, how many people are really better off now than they were 4 years ago? Well, the richest 0.1%, they're doing pretty well, but your average American is in a shit situation right now.
Oh yeah, man. And here's the best part about it. This is, I mean, I say the best part. It's actually the fucking worst part. Is think about unemployment, right? We're seeing unemployment kind of rise in the private sector. Give it 2 weeks. You will not believe the amount of people that are going to start getting laid off when these earnings roll out. They usually announce that they're laying people off once the earnings come out. See how the stock reacts to it, and you tend to see pink slips start to be issued. On top of that, we're in a place where if we do go back to zero, what does that mean? All the smart people who had equity in the market that sold the top, they got a lot of cash on hand. They're going to see QE. It's probably going to be done through the banks. The banks aren't going to lend any money to people who owe debt. They're not going to lend any money to Joe Schmo down the street who's who's $20,000 still on a car loan or something like that because he just bought a new Tacoma. I don't know how much Tacoma is, but regardless, it's these people they're not going to be the first ones to get the QE. It absolutely isn't. It's going to go to people who, or these institutions, these banks, who are going to be able to take advantage of 0%. They're going to buy all these assets dirt cheap, and then after a year or so, maybe a year and a half or so, very similar to how we saw in 2008. Then it finally hits the consumer. Consumer starts to buy in, and then we get a period of 15 years or so where it's just up only. But again, there's going to be carnage in between that period of time, and who benefits from both sides of it? Same people, right? So yeah, I mean, a lot of people are saying it's an election year, nothing bad's going to happen. I mean, if I want to be an asshole, 2020, 2008, 2000. I mean, there's probably a lot more in history we can go back to. Those are just the ones in recent history. And the other thing, too, is we know that the Black Swan is kind of coming from Japan at this point. It won't be known as the Black Swan from Japan. Let's put it that way. Something else will probably happen in the system. We got tons of world conflicts. A lot of people are just going to say that, this is something that happened. I mean, look at 2022. What happened there? The war kind of was caused or started the sell-off that we saw that led all the way to the low in 2022 in October. So anything could really happen. We do know that the system is just extremely fragile right now. Consumers more fragile than the headlines read, and at some point it's going to come. And I honestly do believe that it's going to be the big come down in like a flash crash scenario. I don't see it being a long drawn out thing, and it could last for a few weeks to months. But I think that more than anything, it's just going to shock the system that rates need to come back to zero. But it's not going to help consumers for the most part in the immediate term, just because of the consequences of that.
Hope for the best, prepare for the worst. That's what I've been doing for a while now. Hopefully we're wrong about some of this stuff, but I get the inclination we are not. Okay, that is going to do it for today's show. Appreciate everyone who joined us, whether you were live or watching the replay. We'll be back tomorrow, our regular time, looking at the Fed beige book that'll be coming out, see what's going on with the Fed. I'm really interested on Thursday, once again, on the housing market to see the existing home sale data. The median forecast is 4.17 million. I am willing to bet my left nut that comes in under 4 million. So stay tuned. Maybe I'll be losing my left nut on Thursday. We'll be live for that procedure. All right. Have an awesome day, everybody. If you haven't yet, like, subscribe, comment. Kevin just got to shake his head. We'll be back tomorrow at our regular time. Stay safe in the markets, and we'll see you later.
Take care, everyone.